Well, let's get more of that breaking news this morning. Australia's corporate regulator, ASX, is set to sue the stock exchange.
The Securities Commission will claim the ASX effectively misled the market by continuing to operate faulty technology that cost investors hundreds of millions of dollars.
For more, we welcome finance expert Gemma Acton. Hi, Gemma.
Hello.
Can you explain this for us?
Sure. The stock exchange is really important. It plays a really important role in society. It's where companies can go to raise money, and it's where people like you and me and financial advisors and super funds can go to buy shares in companies. So it's a really important marketplace, and it's essential that it operates well and the technology works so we can buy and sell. The technology has been faulty for a long time. They've been pushing through upgrades for a long time. In fact, the upgrades haven't been going well. The technology has been worse than they've told us, and that is the problem. They have not been telling the truth. The board and the executives have been misleading investors, according to the corporate regulator, about how well the technology is doing. So it's problematic. There are worse problems there than any of us knew, which is bad for the companies that are listed there, and it's bad for people like you and me who want to buy shares.
So, for example, it might mean, is this what it looks like in reality, is that the share might drop by 2 cents and it might be late getting that information out? Is that what the problem is?
We need to know more, and it looks very likely that later this morning we're going to hear from ASIC themselves in a press conference. The corporate regulator hasn't historically been great about communicating very many details to the market beyond very complicated talk.
Yeah.
They're getting much better about communicating what's going on, so we can expect to hear the details later about exactly that, Kylie. Like, how did it affect us day to day in terms of preventing us from doing certain transactions, preventing us from getting accurate information? We don't know the details yet, but we can expect to hear them in a few hours' time.
Yeah, so we're hoping to hear from the ASIC chair a little later on this morning. But the fallout will be huge, and where do you start to repair that?
There are lots of fallouts here. There's the problems about what's happened historically that can't be fixed anymore. The problem of, is the technology okay now and going forward?
Yes.
But also the very basic question of, how can boards and executives get away with misleading the public? Because we hear communications from all sorts of companies every single day, and we just have to trust what they're saying. So it's a big question around that transparency again.
Because boards have to report to the ASX anyway.
They do, but they also have to tell the truth on what's going on, and especially when anything major happens. So it's really throwing into light that question again of levels of transparency.
Right. OK, let's shift gears. Australian wages continue to grow faster than inflation. Is that correct?
Yes.
Really? What does it mean for the average worker?
Kylie, for a long time, prices were rising more quickly than wages were rising, so we felt that we were always getting further and further behind. Right now, they're about neck and neck. Wages are growing slightly more quickly than consumer prices, but both are still too high. So on the one hand, it's good that we no longer feel like we're falling further and further behind, the average worker at least. On the other hand, it does mean that the Reserve Bank, it's another sign they're probably going to wait a bit longer before they cut interest rates, because wage growth did come in a little higher than expected yesterday, which will push out, all things equal, a rate rise a bit longer, a rate cut a bit longer.
All right, let's move on. Aussie tech companies are apparently hiring offshore, saying that up to 99% of local graduates aren't ready to step up and take the jobs.
Wow.
That's a horrifying number.
It is, yeah. It shows a real disconnect between what they're teaching on courses and what businesses actually need. So you'd hope the communication starts to improve there. But what they're saying is businesses are saying that when we hire someone in with a tech training, they still need about 6 to 9 months inside our company learning the ropes before we can actually put them to good use, which is absolutely fine if you're an enormous company and you can afford to train someone for 6 to 9 months. Many small companies just can't afford to do that.
So they go offshore?
They go offshore where it's cheaper, and it's the same time zone a lot of the time, because we have such great talent in the Southeast Asian region when it comes to tech.
But obviously able to deliver a better result.
Yeah, it was
and straight away, 6 to 9 months.
Anyway, then you trace that back to today's net plan results that are out, and it
goes full circle.
Goes full circle, doesn't it? Yeah. Now let's move on to real estate. Airbnb has hit out. It claims that they're contributing to the country's housing crisis.
Yeah.
So are Airbnb the baddies in this housing crisis?
Look, politicians love to blame Airbnb because everybody knows who Airbnb is, and in some regions they might have a bit of a point. For instance, in Byron Bay, there's new rules coming in from September that you can't Airbnb your house for more than 60 days or any sort of short-term rental. But the reality is there is a massive housing crisis in this country, which is not about short-term rentals. It's about the fact that we are decades and decades behind on policy, on planning, on building enough houses. So it's a convenient excuse to blame Airbnb, which in reality is only a problem in certain areas.
All right, Gemma, thank you very much. Plenty more to come from the ASX story later in the day.
Indeed.
Thank you.
It's a big one. Thank you.